Okay, so confirmation bias. Confirmation bias, how do we trade the confirmation bias? It's like this. Maybe let's say price was maybe trending down like this, was creating lower lows, lower high, lower lows, maybe lower highs, and then lower lows, lower high. And then after this, price breaks this lower high here. It means the price changes the character here. After the change of the character, what we have to see that the price, we don't enter after seeing this change of character. We don't enter after seeing this change of character. What we have to wait is that we have to wait for the price to create another structure, another formation, new formation. And this was our change of character, right?
Yeah.
But this now is our break of market structure. So after having these two structures, change of character and break of market structure, it means this structure is already mature or is now matured. So what we have to do is to focus with this structure. This will be our daily area of liquidity because we are using this time frame coordination as our we are using this time frame coordination as our coordination. So after knowing this is the daily area of liquidity, in order for this structure, for this market to come to this area here, it means we have to see the price changes the character and then breaks the market structure in the lower time frame. Which time frame? 1 hour time frame. We have to see the price change the character and then breaks the market structure in the 1 hour time frame. In order for us to say this structure, this market is coming to this area, we have to see that also in the 1 hour time frame, we have the matured shift, which is change of character and break of market structure. So as you can see here, after this price breaks this low here, it means this was the area of liquidity, right?
Yeah.
This was the area of liquidity, daily area of liquidity. So maybe you can find maybe some formations and maybe some formations, stuff like that, maybe inside this area. So what you have to do is that you can take this move because the price must come to this area. You can also trade this pullback, or you can take this counter trend. How? What you have to see after the price reaches this area of liquidity, this daily area of liquidity, what you have to see is the liquidation process that is occur in the 1 hour time frame. In the 1 hour time frame, what you have to see is the change of character in the break of market structure. So when you go back maybe to 1 hour, you have to see the price changes, the change in the character, and then breaks the market structure in the in that time frame. So this is the 1 hour. Let's say this is the 1 hour liquidation process. So after seeing this 1 hour liquidation process, what you have to consider is that this is now your area of liquidity, 1 hour area of liquidity, right?
Yeah.
And we have this formation inside that area. So we will mark this area. We'll mark this area as our area of consideration, but we won't go maybe to the lower time frame, maybe 15 minutes to refine it. No, what we have to see in the 15 minutes time frame, we have to see also after the price reaches to that point, at that, if the price will reach at this point in the 15 minutes time frame, we have to see also the price changes the character there. If the price changes the character after reaching that area, it means this structure already confirmed that it's bearish. Because for the first time, we had this bearish break of market structure here. But in order for us to confirm that the price is bearish, is now bearish, we have to see also 1 hour give us the break of market structure. So the 1 hour must change and then breaks. So if we have this break of market structure, it's the good confirmation that this structure also in the 1 hour time frame the price give us the what? The bearish area of liquidity.
The bearish.
You understand? Are we together, sister?
Hello? Yeah, we're together.
Yeah. So after that, what we have to see in the 15 minutes in order for us to confirm that this is the perfect area to consider the area for us to take the entry, we have we have to see also the price after reaching this area. Also, the price changed the character, and then this will now be the liquidity engineering, right? In the 15 minutes, our liquidity engineering. We can use this as our entry point and this as our stop loss. So when the price comes to this point, we will take the entry. But that was the first first type of confirmation bias.
Confirmation bias.
Yeah, that was the confirmation bias is the first type of bias, but also we have two confirmation bias. The first one is this one, but the second one is that after reaching at this point, if the price gives you this 1 hour break of market structure,
Yes.
you just come to this area, you mark this area in the 1 hour time frame, and then go to the lower time from 15 minutes, 5 minutes to refine it. And if you will find the liquidity engineering inside this formation, that is where you will put your entry. You don't have to wait for the price to come and then change the character again. No.
Oh, okay. So we don't have to wait for that, right?
Yeah, you don't have to wait. You just define this area because the daily time frame gives us the break of market structure, and this was the bearish area of liquidity. So in order for us to confirm this bearish area of liquidity is now it's already consumed. Confirmed is that we have to see also the 1 hour time frame give us the same view. The same view means what? This 1 hour also has to change the character. And after the change of character, you will consider this formation inside this area as your area of consideration. And then you will go to the lowest time frame, 5 minutes, 15 minutes, and below to refine it. And if you will get liquidity engineering or formation, you can use it as the entry. So you don't have to wait maybe the price after reaching this area breaks again or to take this. No, you can you don't have to do that. Are we together, sister?
We're together.
Okay.
But what if you refine it from from 1 hour to maybe 15 minutes? Or let's see from 15 to minutes, and then maybe you can see like can we make the formation from there and go as an entry?
Come again, because I lost.
So we already maybe in 15 minutes, right? And then we are refined to 5 minutes. And then when I come to 5 minutes, I saw a formation in that structure. Yeah. Can I mark that formation as an entry?
Yeah, you can use that because this 1 hour formation, it's like this is it's just a guidance, you know. This will guide us. This will be the first area for us to consider. But if you go maybe to the 15 minutes and see maybe the price give you another formation that is out of this formation, maybe let's say price, this is 15 minutes formation, but this is the this is the 1 hour formation. This is the 15-minute formation. You can use this.
Yeah.
You can use this formation, not this one, because this was our first area of consideration. But As we go down, if we will find another formation that is not being mitigated, we can use that formation as our entry. Are we together? Are we together? Are we together?
I got you. Yes.
Yeah. And if the price gives you the entry at this point, so you will sell. But if you reach at this point also, you have to follow the same process. You have to follow all the same process. You have to wait for, this is the daily time frame. So after daily time frame, you go to 1 hour. In the 1 hour time frame, you have to see the matured shift, means the break of market, change of character, and then the break of market structure. After that break of market structure, you can mark that area. You can use the first confirmation bias type, or you can use the second one. It's okay. But the first one that I taught you about, maybe after having this structure in the 1 hour, you have to wait 15 minutes also to change. This type sometimes can leave you, and can live without taking your entry. That's why I recommend you to use the second method. Just mark that formation and then go to the lowest time frame and then define it. Yeah, then you'll be good to go. Are we together, sister?
Yeah, that's perfect. We are together.
So let me show you one example that I was JPY, and it was this area here. So let me show you the process that I used to execute this entry. It was like this. As you can see here, we have, this was the daily time frame shift. This was the daily time frame shift. So after having that break in the daily time frame, it means this is our area of liquidity. This will be our area of liquidity, right? This will be our area of liquidity. So after knowing that, is that the price must change character and then breaks the market structure in 1 hour time frame, so that they can go to this, we can come to this area. If you see in the price changes the character and then break the market structure in the 1 hour, it means this structure confirm that the journey to come to this area is now started. But if you see also only the change of character, you just have to wait. Just wait, because sometimes price can give you the change of character, but also the price breaks this high here, recreating this point here. So after knowing this is our area of liquidity, the price came to this point. Let me show you quickly. Came to this point here. After came to this point, when you go back to 1 hour, you have to see the price change. Yeah. So after this was our daily area of liquidity that we marked early. So what we have to see is that after the market reaches to this point, we have to see the price changes and breaks the market structure. So as you can see here, for the first time, price reaches and then breaks, changes the character at this point in the 1 hour time frame. But the price didn't break the structure, and then the price breaks the low here. So the price failed to give us the break of market structure, right?
Yeah.
Yes. So the first time price reacted at this point. I think it was this point here, this formation here. And then reacted and then failed, give us the change of character, but failed to give us the break of market structure. And then after that, price came to this point here, this little point here, this point here, and you can see. And then what we have to see, what we see here, the price after reaching that point After reaching that point, as you can see, price changed its character at this point, right? This was the low, low. So price changed its character at this point, and then the price gives us, gave us this break of market structure. This, right?
Yes.
Yeah. And then what you can see here, this was the formation that formed before this break of market structure at that point. So, but this formation is already conditioned. So what we will do, that we have to define that point, because also we have this structure here that you will learn in the next session. So let me, one moment. Hello? Hello? Number. Okay, we can continue. So this is the structure that you will learn in the next session, in the coming session. So after having this structure, let's go back to 15 minutes to refine it and see what we will find inside that point. But I think you have understood from the beginning, we came from daily time frame, 1 hour, and see break of market structure and change of character. And then we mark that break of market structure at this point. And then we marked this structure. And then now we are in the 15 minutes, we are looking for the entry. So as you can see, we don't have anything. We don't have anything. So let's go back to 5 minutes maybe, and then we can see we have this formation, but it's already consumed, right? It's already consumed.
Yeah, it's already consumed.
Yeah. So we can't use that anymore. So let's go back maybe to 30 minutes, and then you go back to 30 minutes, you can see you have only this liquidity engineering here, but we can't use that as our entry because of some criteria that I will tell you in the liquidity consumption. And then let's go back maybe to 1 hour, 1 minute, I mean.
1 minute.
When you go back to 1 minute, there is nothing. Maybe you can see this was the formation, right? This was the formation that is not consumed because the previous one is already consumed. The first one is already consumed. You can see it. You see?
I saw them. They're already consumed.
So already consumed. So you can use that. But the point that I took this entry is in the 30-second time frame. 30-second time frame. Well, let me show you. This was the entry, 1 hour time frame. But when you go back to this point, you can see this was the bullish candle. After this bullish close, this bearish opens. And then after the bearish close, bullish open. Right? Bullish close, open, bullish close, open, bullish close, open, bullish. So this was the formation. This broker, maybe the broker, because of the broker, maybe we have this structure like this, but what you can see at this point also, we don't have a clear high, right? And also here, we don't have a clear high, but we can use this structure as the formation, right?
Yes.
One candle formation. So when you go back to this point, you can see this structure is not yet consumed. This price try to consume this structure, but failed by only few pips. I think 0 point, yeah, only 0 point something pips. So in this case, we will use this one and not this one. Why? Because of some reasons that I will teach you in the liquidity consumption. You will see the liquidity consumption. So after knowing that, so we'll go back to 1 hour and see that this will be our area entry point, our entry point. So we'll just put our entry at this point here, and then the stop loss we maybe put 10 pips, and then the take profit. The first take profit, as you know, the first take profit you will put it in this high, the first high that after the price breaks above this turning point here will be your first take profit if the price took the entry at this area of liquidity. So if the price take this entry here, the first take a profit will be at this point, and then after the price breaks this high, the next take a profit will be at this point, the next high, I mean. After breaking this high, it means it will be this point here, final. Take a profit. Are we together?
We're together.
Yeah. I will explain more about take a profit in the next, in the coming sessions. But for now, this will be our first take a profit, our second take a profit, and then our last take a profit. So let's see how the price pray. And see the price prays as we expect. You see? So that is how we can take confirmation entry. So for those who use this, the first method that after the change of after the break of market structure of the 1 hour, maybe they mark this structure and then they wait for the price to come in the 15 minutes and then change the character, and then now they can use this as the entry. You can see they missed this entry because this structure, after tapping this area, the price moves with the higher momentum. You see?
I see. I see.
Yeah. So if you consider the first option, confirmation option, you maybe price would leave you, and then maybe let's see in the 15 minutes. Yeah. Maybe if you use this formation at the entry, the re-entry. But if you use this formation, the price
It's left you.
Yeah, will left you. You have to, that's why I recommend to use the first method, because it is the good method. It is the good method of confirmation. That is how you will trade confirmation.